Well, hi there. It's Sunday night update, as quite often I do. And today I want to be talking about Bitcoin. Now, I don't often trade Bitcoin, but I've actually just entered a position. And I know I said on Twitter that I wouldn't be trading Bitcoin at these levels. And I seldom do trade Bitcoin, but I thought, actually, on hindsight and studying the charts a little bit, that it would be a pretty good idea. So I've just bought Bitcoin now at, there's the price, 29,700. And it's at a support that's been holding. This is a day chart on Bitcoin against the US dollar. It's been holding there for a week or two. It's probably 2 weeks, maybe a little bit more even. So I've just bought there. Now let's just switch across to the weekly chart and I'll show you why I've done this. All right, so there's the weekly chart, and this red line down here is very long-term support, which was major resistance, and it's around about 20,000. Now we're at 29,000 at the moment. I bought it at 1-to-1 with a very small dabble into the market right there at that current support, which goes back to June last year. So it's about a year ago that we were last at these levels, and we've been holding up here pretty well. We've had lots of bounce ups and down around this level after a big spike on the weekly chart several weeks ago, 4 weeks ago or so, 5 weeks ago maybe, and a big spike down there. And for the last number of weeks we've been in a very, very tight range, uncharacteristically tight for Bitcoin, which actually isn't particularly bullish, but there's a chance, just a wee chance, that we'll hold above this level. Now if I move this green line down a little bit to a more accurate position, which is at the lowest of this low area here, this previous support, you can see that in fact we've held above that level for 4 weeks in a row. We've held just above there, even though last week looked like it might just close beneath there. It didn't. This week we got a rally. Last week we had a rally, but it fell back down rather rapidly. And what we have is an inverse hammer candle in the weekly chart. Now, if you had seen my video, which I posted up last week on candlesticks, you'll know that the inverse hammer candle, even though it indicates weakness in the market after rallying, is actually potentially a reversal candle pattern. And I also said that it enables you to get in on these candle patterns right at the bottom of the candle. So we've just got in now at about 29.70, which is just about where it's closed last week. But you can see we've got a shaven bottom inverse hammer candle pattern, and it gives us a very good risk-reward ratio. Now, I don't have a stop loss on this trade because I bought it at market, and there is potential for it to drop by 30% if we get back down to these levels at around 20,000. But if I've put $1,000 in, I'm not going to tell you how much I put in, but it's a reasonable amount, but not a bank-breaking amount. If we drop down to 20,000, which is a fantastic long-term support level, as you can see, long-term resistance, which eventually we broke through, and we haven't got quite back down there yet, but there's every possibility we will. I'll have lost 30% of my money. So if I put $1,000 in, I will have lost $300 on that 30,000, so I'll be down to $700, but it'll give me an opportunity to buy some more at this lower level. So I'm looking at this as an investment opportunity rather than a trading or day trading or even a swing trading opportunity. It's more like an investment opportunity. If I do manage to buy some further down, I'll actually be quite pleased. So I don't mind if it goes up or down from here, because I'll be buying some at around 20,000, which will average my price into about 24,000, which is right in the middle of these two lines, the green and the red. Notice that the 200-week moving average is also around this price, incidentally, just around about that level there. So my average price will be, if I buy an equal amount down at 20,000, will be about 24 or 25,000. And there's every chance that I could double that money rather quickly if we get a rally back up to just 50,000. Bearing in mind that the high was around 67,000. So if we get a rally just up to this resistance here, let's just zoom in a little bit, if we get up to that resistance there, which is at around 50,000, that sort of level, that will mean I'll have doubled my money in perhaps, I don't know, 4, 5, 6, 10 weeks, something like that, 2-3 months in that region. So I'm not risking very much. I'm risking a third of the amount of money I put in. If I do put in another lot there and we bounce back halfway to 24,000, I'll be break even. I could even take the original piece out that I put in at this current price level and just keep the one at the bottom, which will then actually I wouldn't be taking it out at 25,000. I'd be taking it out at 29,000 where we are at the moment. I could take my original trade out, close that one at break even, keep the one from down at 20,000, and if we did get up back to 60,000, I'd actually triple my money. So that's the kind of thing I've got in mind. So I'm now in Bitcoin. I very seldom trade Bitcoin or any other cryptos. I did put a video up, and not a video, a picture up on Twitter, or an image, a graphic that I took from these charts on Sol, another cryptocurrency which looks actually like a good buying opportunity, or it will be in the coming days and weeks. So even though I'm not particularly bullish on Bitcoin, I think it's a good chance to average in to an investment opportunity for a move back higher. Of course, if we drop down below 20,000 down to these levels, then it'll be incredibly bearish. I don't think that's going to happen, but if it does, I'll be getting out of this trade and I'll have maybe lost half of the money that I put in, which, as I said, is simply an investment. If for every $1,000 I've put in, I've lost 500, it's not the end of the world at all, but there's very good opportunity for me to double or even triple my money if it rallies in our direction, even from levels lower down like 20,000. So that's what I'm doing with Bitcoin. I'm in 29,700, looking for either a rally up to 50 or 60,000 or a drop down to 20,000 where I'll buy some more, and then looking for a bounce off that level there. So good luck with that. It's not really something that I normally trade, but I think with this particular instrument, there's a big upside opportunity. The downside risk is fairly limited unless we drop below 20,000. If we do that, I'll get out of the trade. I've lost, $500 on 1,000 on every 1,000, which is not the end of the world, but I could triple this money pretty easily. It's a speculative trade, it's a risky trade, but it's not a bank breaking trade by any means, and it's just something interesting to have a go at. And I'll go for a nice holiday if I make some money out of this. So that's all I've got for today. All my other trades are up on Twitter. You can go and have a look at them. I've put a chart up for every currency that I'm trading or looking to trade. The euro and the Swiss franc I'm in at market open today. And then I've got trades on the NASDAQ, and I've got a trade on Brent crude oil. Speak to you again soon.